Appreciate you guys showing up, man. S&M Trading. This is our fourth educational series. We're gonna go ahead and go over Fibonacci retracements today. Welcome everybody as you guys are coming in. KP, what's going on, man? Appreciate you guys coming. People coming in slowly but surely. We're just getting started. You didn't miss anything yet. Just starting out. So we'll go ahead and get started. So going over Fibonacci retracements, okay? I'm not sure how many of you guys are familiar with Fibonacci retracement tool, but if you actually look it up, actually just Google Fibonacci. His real name actually was Leonardo, I want to say Pisano, if I'm pronouncing that right. But I guess he was dubbed Fibonacci, or like the son of Bonacci or something. Like his father's last name was Bonacci. But anyway, famous scientist back in the, I want to say 1200s, I want to say. But yeah, so they named this Fibonacci tool that we use within TradingView after him. And Fibonacci retracements, actually, it's actually a number sequence. And believe it or not, it actually occurs and applies to a whole lot of things besides just Forex, okay? Applies to nature, animals, the human body, things of that nature. Pretty much everything. You're gonna have to Google it. I'm telling you, first time I Googled it, I was like blown away by how many things Fibonacci applies to. So it's actually just a number sequence. It's pretty much like the first two numbers are the next numbers are some of the first two numbers, like 1 + 1 is 2, then 1 + 2 is 3, and then 2 + 3 is 5, 3 + 5 is 8, so on and so forth. And as you go along, I guess the golden ratio that came out of a sequence of number is always 0.618. So that's how the 0.618 retracement level is called like the golden ratio, because it's pretty much the ratio of all the numbers combined. So, but we don't care about none of that stuff. All that stuff is, mathematics. Sometimes it's just a little boring when it comes to things like that. But that's just giving a little history of where Fibonacci came from and how it applies to a whole lot of things besides Forex, okay? So how we utilize the Fibonacci retracement tool within Forex is something like this, okay? You're looking for a continuation, ideally within some sort of trend, all right? Whether it's an uptrend, a downtrend, you're basically taking your strong move up, and then once price starts retracing, then you can go ahead and throw your Fibonacci retracement tool and take it. In this case, it's an uptrend. You take it from the low to the high. Okay, you take it from the low to the high as it's retracing. You can't just take the Fibonacci and throw it on when you see like certain wicks coming up out of a certain point in an area or a zone. Okay, there has to be some form of retracement from that area, from that zone, or whatever you're looking at. There has to be some sort of down movement, okay, as it's coming down. If you can spot that and see that, you don't just jump into a sell just because you see price coming down, okay? What you want to do is, one, identify the next support level that price can be approaching, or you can go ahead and throw on your Fibonacci tool, okay? So as you can see, I took that from the low to the high. The low was down here, it started down here. You always want your low to be your 100% level, okay? And this is very important because a lot of times people can get confused. By looking at it just like this, you can easily get confused because your 0 is up here and your 100 is down here, okay? I used to get confused when I was learning this for the first time when I was a beginner. And I was like, well, why wouldn't the 0 be down here and the 100 up here, like that doesn't make sense. But once you get to practicing and once you kind of look at it in a different perspective, then you can understand, because you have to look at it like this. If price came up to here, it started out here, came up and started retracing, okay? If it comes all the way back down to the level where it started from, where you started it, that's considered 100% retracement, okay? It's 100% retracement if it comes all the way back down to the place where you started your Fibonacci level at. So that's how I remember it, okay? If it comes up and it comes down, it's 100% retracement. So on its way down, you have these certain levels, okay? Price can hit any one of these levels. This is highly customizable. When I scroll down the price, I'll show you, but this is just an illustration of how Fibonacci works, or it works in its most ideal state. Each of these levels, they're significant within the market, okay? For people that have certain strategies, for people that only trade off of certain Fibonacci levels, like maybe the 50 and the 61.8, then a lot of times they'll have these other levels off, because according to their strategy and what works for them, these other levels are somewhat insignificant, okay? So whoever you're watching, if you've seen, you know, you hop on a Zoom or you watch YouTube or anything else like that, and somebody's using the Fibonacci tool, then their fib is going to look different from yours, okay? I just personally added this 0.88 because somebody I watched had a 0.88 fib level in there. So I went ahead and threw it on mine just to see how often price reacted to it. So everyone's fib is going to look different. It's the only thing that you need to be worried about is customizing the Fibonacci tool and its levels in accordance with what's most comfortable for you and for your style, okay? So these are the levels. This is the settings for the fib retracement. All you do, like you saw me just do, you right click pretty much on any of these levels, go to settings, and you can bring up the Fibonacci retracement settings. You can have your trend line. You can throw that in there, which will give you this little dotted trend line. You customize that however you want. I personally like to have it off because I don't want any other markings or anything like that interfering with my own technical analysis. You can make your levels lines thicker or smaller. I mean, it's pretty much basic stuff that you can do with here. Extend lines left, extend lines right. That's pretty much going to bring your Fibonacci all the way across the screen, as you saw there on either side, okay? So this is where your settings are at. By default, all of these settings, they go pretty deep with the extensions, and these are very, I think these are used most often by swing and position traders, because if I go to apply defaults, then I'm going to go ahead and turn this background. You can turn the background off. This is how it looks when it's in default mode. Okay, I like to have this off, and you can switch. I'm going to move this a little bit so you guys can see. You can move your labels to the left, right, or center. I personally like to have them to the right. You have them top or bottom, whatever you prefer, and whichever configuration is going to work best for you. So I'm going to put these in the middle. I like it in the middle. I never use it in the middle. Okay, so this is how it looks by default. There aren't any extension levels to the upside, okay, by default. Your extension levels by default, they can be considered your target levels based off of whatever fib level price retraces, okay? You come down a little bit, then you can see that these other fib levels are in the positive by default, okay? So that means it's going to go all the way down to where I have price at. Going all the way down here. So I don't use these. This is like totally against my position if I were to place a fib. Like, these don't make sense to me. I don't know why they have those in default if the Fibonacci tool is used correctly. So what I like to do for my fib levels is, one, adjust these extended levels, and I know I can have my negative 0.8 on here. I gotta erase the whole thing. I got my negative 0.618, and that'll give me one of my targets up here, okay? I go back to here, and then I can take, actually I'll keep this one on, and I can take this one and make this negative 0.272. And that'll give me, I'll change the color too. That'll give me another one of my target areas for the retracement, okay? That trend line's on there as well. I'm gonna take that off like I wanted to. And then I'm gonna go ahead and, actually, I'm gonna copy this, put this down here. I'm gonna move my 1 to that spot, and then I'll make that black. You can customize all these levels however you want. I know AJ's method, I know the levels by heart and the colors and all that stuff. That one really works too. And if you guys want, I can go into that as well. I know I don't teach it as well as AJ because it's his method, but I kind of have a handle on it. I know the levels that he's looking at and the basis for the strategy. And I'll go ahead and make this my 88 level. Okay. And then since this is my golden ratio, I'll make that bright green. This one is kind of not significant. That one's a little more significant. And this one, I'll probably make a dark green. So I want to say, actually, no, take this guy out. Cool. I want to say we're good. Okay. So these are my fib levels on here. So now that you guys know how to go through the settings, the basis for your retracement tool, like I said, when price starts retracing from a certain area, then you want to go ahead and do your fib. You want to take it from the low to the high in an uptrend, okay? If you're in an uptrend and you have maybe 2, 3, 4 good bullish candles, that's the way I personally like to use it. You can take it from a low to a high that still kind of has your higher highs and higher lows going through that movement. You could do that as well. I personally like to have strong bullish movement throughout and then see some sort of pullback, and then I'll go ahead and throw my fib on there. That's just how I personally like to do it because I've found out that that's what works best for me. But once you do have price coming back down, starting to retrace, okay, your fib level is going to come in. Here on this illustration, I just drew this and threw the fib on. It just happened to bounce off of the 61.8 going up, okay? Now remember, price isn't always going to do this. It's not always going to look like this. It's not going to come straight down to the 61.8, give a good, like, nice long wick to show you that there's some rejection, and then just go the opposite way. It's not going to do that all of the time, okay? A lot of times you're going to have some fluctuation in here. You're going to have some up and down movement between these zones or between these retracement levels before it eventually can reach either 61.8, the 78.6, or the 88. And a lot of times it'll hit the 50 as well, okay? Like I said before, price reacts to all of these levels. The only thing is these levels right here provide the strongest retracement most of the time, okay? So you're gonna have to play with it. You're gonna have to find out what works best for you. You're gonna have to back test it. You throw it on price, and I'll show you exactly how to do that when I scroll down. You can find certain areas within the market that will provide the best results as far as which of these levels price has bounced off of and continued in the current trend that it was in. So if you have an uptrend, comes down at 61.8, it's a good chance it's going to keep going. Hit the 50, it's a good chance it's going to keep going. Okay. Hits the 78, there's a great chance it's going to keep going. But these levels are all hinging on price reaching them and having some sort of reaction off of them to continue within your current trend, in this case, an uptrend. Okay. So let's go ahead and scroll down. You guys have that. We'll go ahead and find examples in the market where price has done exactly as I just illustrated. And the good thing about fibs, guys, is you can do this on any time frame. They apply on all time frames. You just have to remember, the higher the time frame, like for instance the daily, then the longer that retracement is going to go. Okay, that's why I really that's why I really envy about swing position traders, man, because they'll just set a position and just have their analysis spot on and just let it go on for weeks, even months. They'll be in a position for just forever and just bank, like off of one trade, one analysis, one decision, come back a couple days later, oh, hey, oh, snap, that's $20,000 or something, you know. I personally can't wait to get to that point. But I'm slowly changing my style as I go. I'm getting better at holding. Traditionally, I'm a scalper. That's how, you know, I had the most success doing that. But I am getting a little busier these days, and I have been adjusting my style to coincide with a busier schedule. So, like I said, each time frame is going to yield different results. Okay. The thing to remember about fibs, guys, is that you can't, I'll say can't. I wouldn't say it's not recommended. I'll say you can't use it by itself. Okay. Even though Fibonacci tool is a great tool to try to predict where your retracement is going to end and go in your favorite direction, I'll say I wouldn't advise. I wouldn't advise you to use it by yourself. Okay. It's best used when in combination or with other confluence with either a trend line, support and resistance line, a major supply demand zone, things of that nature. You want to have it as an extra form of confluence. Okay. That's how it's used the best. All right. So looking at this is 4 hour. Actually, I'm going to drop down to 15. We're on GU. It's current price right now. And I'm going to go ahead and put this one actually right here. See something going on right here. So I can take my down move. And like I said, I like a strong up or down move. Okay. If I see that, I can go ahead and place my fib. And it's personal preference on the placement, whether to include the wicks or to not include the wicks. It's all personal preference and what works best for you. Okay. A lot of people, they like to use the line chart as well when they place their fibs, because the line chart is only comprised of candlestick bodies. The line chart does not include the wicks that come with the bodies. So if you want to be a little more accurate or more technical, then you can switch to the line chart and you can throw your fib on there. Then switch back to the candle chart and see how everything lines up. So I'm going to go ahead and do that real quick just to show you guys how it looks. I'm going to take it from here to here and see where it starts retracing. And your retracements, guys, depending on market conditions, they're not always going to just shoot back in the other direction. Like just because price came up here and then came down, and this is already a retracement level, I can tell, it's not automatically going to shoot right back up like I drew in the illustration. Okay. We're just showing where price is going to have some sort of reaction after the pullback. Okay. So we go ahead and take our fib, take it from the low point to the high. Okay. And as you can see, as I did that, our 1 is down here. I'm going to make that black. I don't like it being gray. our 1 is that color, and my 88, I don't need that being that color either. I'm gonna make it a dark. Yeah, there we go. Okay, cool. So you see my 1 is down here and my 0 is up here. Price came down, bounced off 78, and now it's coming back up, okay? You can stretch these for as long as price is gonna continue in order to fully capture how that retracement is gonna go, okay? So we switch back to our candlestick chart, we can see that coming from the line chart, like I said, the line chart is only comprised of candlestick bodies, does not include the wicks, okay? So I have my fib at the bodies down here and the bodies up here. When you come down and you start retracing, you have to remember, you have to really pay attention to whatever time frame that you're currently on, okay? If we're on a 15-minute, we see price had a reaction from the 78.6 area. This candlestick formation right here, these two candles, is gonna be something like a wick on the 30, all right? So if we're following it on a 30, we came down, we wicked through the 78, and now we're on our way back up, okay? Currently, we're breaking through the 61.8 and came down and retested. And now we're on our way back up because we are in our, not our retracement phase, but our continuation phase coming from this strong move up. And overall, I want to say we're kind of in a little sideways range on the 15-minute. Let me go out to the 4-hour. I want to make sure what kind of trend we're on. Okay, so we are still somewhat of an uptrend. It may be a little ranging, but we are in an uptrend currently. So I'm going with the trend. We're totally fine right now. So as far as having this area that lines up with the 78.6, okay, we can look back in time, and actually, I'm just gonna throw this on here and see where price ended up lining up with the 78.6. So we had this area back here where price rejected from, okay. Price broke through, came back, retested here, all right. Price rejected here as well from this area. And go back just a little more to see we've had a lot of interaction with this area back where price was back here. A lot of rejections, okay. We had a break, and we had another break, retest this area, and price took off from there. So as you can see, the 78.6 on this Fibonacci retracement all the way up here coincides with a valid zone, okay? You want to place your fibs as extra confluence when it comes to that. So realistically, I could have had that zone on there already, all right? Ideally, I could have, but it also works just like I just did it. But if I was seeing this move come down, then yeah, I would have had my fib up there and I would have been watching as price starts to react and slow down. You see, we had this long bullish move right here on the 15 that really didn't show any signs of slowing down. It's a strong bearish move all the way down. And we start stalling out when we get closer and closer to this zone, okay? So I could have drawn a fib on there to see if price was lining up with the 78, and it already did, as we just saw. And now it's in its retracement phase. It came up and had some sort of reaction off the 61.8, as you saw. Then blowing past there, now it's in its retracement phase. Not retracement, but it's in its retest phase. After our break, retest, now we're taking it up from here, okay? So this level as well, as you can see, 61.8, that's a level 2. Boom, around 61.8. You guys can already see the rejections and the support and resistance that price is doing around this level that matches up with the 61.8. Okay, you guys can see these already happened here and back here as well. Okay, and that's enough for me because I already know 61.8 it's a significant level, so it's going to match up with some sort of support or resistance level within the market in the past. Okay, so as we come up, we're going to hit the 50. Right here, you can already see, and I'll just throw another level on here like this, just to see where the 50s reacting from. Our reactions here. We have support and resistance here. Okay, we can go back some more. We have this right here. Okay, we got this really good support back here. We have this tap or this bounce right there. Okay, so as you can see, these levels are going to match up with whatever happened in the past in the market. All right, so we can go up to the 38 and try it one more time, see what's going on. We had this break and retest here. Okay, we also had those points right there. We had these levels of rejection here before finally breaking through. We had this really quick break and retest coming through here. Okay, we also have all of this traffic within here. Okay, so this is why I always say that pretty much every Fibonacci level, not everyone, but a good portion of them are going to have some sort of effect within the market. It's up to you and whatever your personal preference is to, I guess, customize whatever levels that you want to take out. I see a lot of times people don't even have the 23 level within their Fibonacci tool. Okay, the 23 or the 38. Some of them just like to have the 50, the 61.8, and the 78. Some people just like to have these two. You know, somebody will have all three of these and leave all this out. And their strategy is if it comes within, you know, between the 50 and the 61.8, and that's kind of like their entry zone, and they'll take the trade from there. They're not interested in whether or not it reaches the 78. They only have these two levels, and the 1 and the 0, or the 100 and the 0 level on their Fibonacci retracement tool. Okay, so we can even do the 23, and you can see that price came up here, rejected from there before finally busting through. How do I hit that one? You have rejection here. Okay, you got support over here. You got rejection, or not rejection, but resistance right there. We go back a little further, we have support all through here. All right, you have resistance right here. This is why I say all of these levels are significant. That's why I like to keep all of them on there, because I know that price has reacted. If I draw my fib right, then price has reacted in the past to all of these levels. So all of these levels are going to be significant. As far as even the 80 or the 88, I want to see how much that lines up with how the market did in the past. You got it right there. You have your resistance here. Okay, back a little more. You have your support here. These I would consider the 78. Didn't make it past there, but we had this right here. We had this break and retest of the 88. Here it didn't quite reach it. But yeah, I'm not gonna go back any further. This is a 15. And like I said, guys, this Fibonacci tool, you can apply it to all time frames, but you have to make sure that whichever time frame that you're on, you have to realize how far or how long that retracement is going to play out. On the 15, it may not look like a whole lot, okay, as compared to maybe the 4 hour or the daily. So this is just GU, okay? So you can go back, and this isn't the only move that was made. Let's go back and see some other moves that were made. And I'm just gonna erase all of this, okay? So let's look at some other moves, try to find some other good moves up in here. You can even do this one. It was just recent. Even though this isn't my personal preference, I prefer, like I said, this is for me personally, I like a strong move either in either direction, either going up or going down. This strong move up, then yes, I'm gonna place a fib from the low to the high once I see it retracing down, okay? But you can also place a fib anywhere from a low or from a high to a low or a low to a high, even though it has these little consolidation periods or these little pullbacks in here. So you can take it from up here as well, have your 100 up here and your 0 down here. So from your high point to your low point. You don't always have to switch over to the line chart, okay? You don't always have to just include the bodies. Don't always have to just include the wicks as well. It's all personal preference, okay? Doesn't mean it's gonna work out any other way, all right? It's just personal preference. So if you take this move, even though we did have a little pullback coming from here with more down and all these lower highs and lower lows going on, we can still start our fib at the top of this move to the bottom of this move, okay? So we have that, and we can see that the 78, boom, the 78 was our retracement, okay? So once this move started coming up, okay, once we saw this move complete, and then we see price starting to come back up, then we can draw this fib on here, okay? You don't want to draw a fib prematurely because you don't want to try to predict where price is going to stop, okay? You want to see, that's the most important thing. You want to see a good retracement come through. I would suggest personally that until, like, say on a down move like this, you're in a downtrend, right? On a down move like this, you don't want to start a fib until price takes out your lower high or either one of your lower highs, okay? So once price gets up to maybe about here, then you can go ahead and draw your fib on there, especially if you're taking it from all the way up here. You already know that if you're experienced with fibs and you've used them for a while, or even if you're a beginner and you have to get some more work under your belt with fibs and some more practice, some more back testing and all of that, then if price is getting up to here and you drew your fib after this long move, you know that this isn't the fib level yet, okay? Just by looking at price, if it's coming up here, like if let me see, what is this? Let me take this off real quick. If you can take price off of here like this, and you're looking at price, you're like, like even if you didn't have this here, okay, this little retracement right here, you'll start to get the feel for where your fib levels are at before you even draw, okay? So if you're taking it from here to here, you know that the 50% retracement is gonna be somewhat in the middle of this move because your 100% is up here, your 0 is down here, so your 50 is gonna be somewhere around this area. So if you're looking at price and you open it up and like, oh, well, it's not the 50 yet, let me go ahead and throw a fib on there, okay? So you throw your fib and then you see you're at about 38. So your 50 fib is around here, okay? So we know how this plays out, but you throw your fib on there and you watch it, okay? You can either have your alarm set through TradingView or call levels or whatever. You can't directly place an alarm on your Fibonacci level. But what you can do when you're in TradingView is what I like to do is I like to place my alarm level like a little bit above or below on wherever direction that I'm placing the fib. In this case, it would be below. I'd place it below the 50, okay? So I know that if I'm looking at this retracement and I've set my fib when price was around a 38, then the next place that I'm looking for is the 50. So I'll set it below, a little bit below, okay? And when it gets to the 50, then I'll get my alert on my phone, or if I'm sitting here, I can watch it. If I'm looking at another pair, and I can go in my chart and look and see what price is doing, okay? I'm looking for some sort of strong bearish action, some sort of reversal, some sort of bearish candle reversal pattern within here, okay? If I see this and I see price coming up and it's already giving me this bullish candle, I have this wick up here, that's still not enough for me, okay? Especially being on a 15-minute, I need to see I need to see something, not this crap right here. Like, I'm like, okay, well, price isn't gonna reverse from there, okay? I can watch it for a little longer, and once I get this, if I see this forming, I'm like, okay, well, it's on its way back up. Let me go ahead at the 61.8. So I'm like, okay, I'm gonna wait till 61.8. I'm gonna see if I get any bullish price action going on around that level, okay? Because it is coinciding with this support and resistance level. 1 second. This support and resistance level right here, because price bounced off of this and it was support and resistance in the past. So this is the next level I'm looking at. And plus, obviously, it's the golden ratio. So, but I know that it's not going to retrace all the time just because it's the golden ratio. It's not going to just come to 61.8 and then reverse from there. No, you want your confluence. You want your fib level. You want some sort of support and resistance line, and you want some sort of price action, some bearish price action that'll let you know that it's safe to enter the trade, okay? So once price didn't reach here and it went past it, I got this big bullish engulfing candle, so I'm like, okay, well, it wasn't the retracement I was looking for. Let me go ahead and set it at the 78, okay? And then I see this before price even reached the 78. I'm like, okay, well, we have that there. That's still not enough because it's still a bullish candle, okay? Even though my next zone also matches up with the 78, okay? Because we had these rejections back here, and we had this long doji come through here for some more up. So I already know this is a valid zone right here. It's matching up with my 78. Then I get this right here. All right. So my candles are getting smaller at around this level. I'm wicking through this level. This first candlestick on the 15-minute time frame, this first candlestick barely tapped my level, okay? This next one came up because you gotta remember, at one point, this candle was full and was coming up here. So I'm not considering that to be a break. What we all teach and what we all know from what me and Marcus have told you guys is to do what? Wait for your candlesticks to close before entering a trade. Because anybody can just come here and look at the candlestick, see that it's green, hit buy, place your stop and place your profit, and then walk away. Okay? They didn't wait for the candlestick to close. They saw it when it was full and they got excited and they jumped in. And what market ended up doing was faking them out. Okay? So they just lost. Their stop definitely got hit on this one. So this is why we stress to wait for your candlesticks to close. All right? So price came up, wick through here. And then you got to remember at one point that this candle was green as well. That's what gave us this wick. All right? So when we're up here, we can see that we got one wick, two wicks through the 78, 3 wicks, then coming back down. That's when you enter, okay? This is when you enter. As soon as this candlestick starts turning red, you got your wicks coming through here. That's some solid rejection from the 78.6. And it's also extra confluence having reached this zone where price has previously rejected from before, okay? So drawing your fib levels through a movement such as this, where you have your lower highs and lower lows coming through, that's perfectly acceptable as well. And like I said, it's all about personal preference. You don't necessarily want to just go blindly and throw a fib on there just because you see price coming back up. You do want it to retrace to a certain, not to a certain level, but a certain amount. Like I said, perfectly above your most recent lower highs on this case, okay? And then when you bring in your target levels, here's my preference on the target levels. I don't even look for these unless price retraces past 100%, okay? If it goes past 100%, then I'll look for my retracement levels to get hit. And those would be my target areas. If I was a swing trader, then yeah, of course, I would be looking for those targets to get hit, especially off of a good setup like this. But from here to here, it's about even there. I mean, it's not even all the way down. That's already 60 pips. I'm fine with that. Because like I always say, 10 pips will save your life. All right. The only difference between one person's 10 pips and another person's 10 pips is the lot size. Okay. 60 pips. I mean, I don't know anybody that's going to complain about 60 pips. All right. So if you're looking for this extension down past your 100%, well, not your 100% retracement, but past your zero, I fudged up on that terminology earlier, my bad. But yeah, if you're going to come past your zero, then you start looking at your extension levels, okay? Those moves are more likely to play out on the higher time frames because you can see them better, and the higher time frames, they go on for longer, and you're going to net more money going off of Fibonacci on the higher time frames. So I'm just showing you guys a 15. So we saw how that move played out, okay? We can look for some other opportunities where some sort of price action like that ended up going in our favor. And we can probably take this one right here. We saw the strong move, and you guys know I prefer stronger moves. I like this strong bullish move up here. Take it from wick to wick, stretch it out, and price ended up hitting the 61.8. And this time, it did end up going past our extension level up here, at least our first one, okay? So you have to have your levels drawn out the right way, whether it's just at the bodies or including the wicks. And this is my zero over here. Since this move is stretched out, I'm going to do this, have these on the left so you guys can see better. You guys can see, I started my one down here, and my zero is up here at this wick. Price came all the way down, even though it did all this stuff on its way down, okay? Like I said, it's gonna, if you draw it right, it's gonna have reactions through each level. Price isn't always going to just drop straight down like it did in this example over here at the beginning, okay? Price isn't always just gonna come straight down like this. Sometimes it's gonna struggle on its way down, but at the end of the day, it's gonna have its retracement at one of these major retracement levels. In this case, it was a 61.8, okay? So after this strong move, like I said, came down, bounced around at the 38 level, couldn't get past the 23 level, okay? and ended up coming down. Now you're at your 61.8, which you're in your uptrend after this strong bullish move. So you have your impulse, correction or retracement, and then your continuation. Okay. This continuation right here would have netted you from the 61.8 and come up to your 23 about 50 pips. Okay. Because after you hit the 23, like I said, price reacts to all of these levels if you draw out your Fibonacci correctly. It reacted here, came back down, bounced off the 50 because we are in an uptrend. Okay. And then continued from there. So that's the overall move. What you could have done after we had this other strong bullish move, and your fibs can work within your fibs as well. Just letting you know. You could have taken price from down here, and I like to take it from, I can include the wicks, but you can take it from the start of your first bullish candle up, or you can take it from your wick down here. It's whatever you prefer. If we could take this other one off, you can see that even within this move, okay, even within this move, you got your 1 down here, you got your 0 up here. This is a strong bullish move, and you have your retracement back down to what? The 61.8. Totally just rejected right off of there. It came down, wick through it, came back up, and from there, you just took off. Hit your extensions and everything. So the Fibonacci is a very, very powerful tool. But like I said, you don't want to use it by itself. Trading strictly off of Fibonacci is not recommended. It is recommended for a tool of confluence, like I said, with your trend lines, with your support and resistance, all the things of those nature, okay? So you want to make sure that whatever level that you're eyeing, because you know that the greater Fibonacci levels of retracement are the 50, the 61.8, and the 78.6. Those are the most, I wouldn't say the most popular ones, but those are the ones that have the most reactions, okay? This 88 is just the, this one is just the retracement level before it completes 100% retracement, okay? Because if price was to come all the way up here and then starts retracement phase and come down all the way down and bounce off the 88, then it's not considered 100% retracement. If it came down here, then yes, it would be. And then from here, even this, okay, this is a great opportunity for a buy, because if price comes back down here, then you have what? You have a double bottom. And a double bottom, as you know, is a great, it's a great chart pattern to try to predict that price is going to bounce off of here once again and go up, okay? You also have to put into perspective, if you're taking, or if you're even starting a Fibonacci anywhere on your chart, and if you're doing it the right way, take or start your Fibonacci from, that's already a significant level within itself, okay? Because price isn't just going to start going in one direction out of nowhere. It's going to be off of support resistance or trend line or whatever, okay? So this one just happened to be lined up with these areas back here, okay? They were resistance and they blasted through, never came back to retest, and now this is the retest of this breakthrough of this resistance. Now it's support. Now it's on its way up, and you can also see from where you originally started your fib, from back here. This lines up with all of this consolidation back here. It lines up with this, which was the break and retest of this level before going up some more. Come down, has a hard time getting through this area, finally breaks down, retest, comes back down, and slowly creeps up. And then it ends up going up, retesting right here, and coming up, okay? And now it finally comes down, bounces off of here, and blasts straight through. So you have your first fib that we had on there already right here, okay? That's your first fib. And then your second fib, once that retracement comes off of your second fib, let's move this out the way. And this is over here, my bad. I had these reverse, I'm used to it being a different or a certain way. So you have your first fib, which was that, okay? Your first fib came up, you drew it came down, eventually hit your 61.8, and then took off from there, okay? After your first fib starts taking off, and then after it starts to retrace a little bit from this 23 on this fib, as it starts to come down, then you can take your other fib, bring that in, and match that up and see where that is gonna retrace from. And this one retraced from the 61.8. So this right here, you have 2 entry points, okay? This is an awesome, awesome way to capitalize and scale in on your entries and add multiple positions, especially if you know that you are in an uptrend and price is just going to come back, not reverse, but retrace and then keep going in that uptrend. You catch these retracements as you're looking at your chart, you open it up, you see that price is coming down and going up and creating V's and stuff. Then you know you go ahead and throw on a fib, okay? So this would be your first entry. Well, not your first entry, no, I'm sorry. This would be your first entry because you threw your fib up. This would be your first entry, and this would be your second entry. Plenty of ways to work these guys. After your first entry hit, your first hit off this fib, you could have held it after it started having that reaction from your 23 fib on here, okay? So you could have rode this up, because me personally, I'm sorry, I'm not withstanding this whole thing. Like, I'm just not. If I ride this up, that's about what? That's about 50 pips for me. I'll take that, I'm running. Soon as price starts coming down, I'm like, oh, well, I could throw another fib on here, okay? And then that's your second entry or another entry. Instead of stacking them, like, that's just me personally. I'm not holding out for all that. For those that can hold out, that would be your second position, okay? And then it just takes off from there. You have 2 positions running, going for all this, way past your extensions, all of that. Could have held it all the way up to here. Off of both of those, then let's just start from here. You're looking at all that. You're looking at almost, 160 pips from there if you're able to hold, okay? And that's 160 pips on the first position. On the second position, you're looking at probably about, 140 pips, okay? So altogether, that's 300 pips off of 2 positions. That's quick math. Y'all like that. But that's what I'm saying about fibs, man. They're all over the place. You can do them. I'm gonna hop on a higher time frame just to show you guys. I'm gonna go to the hour, and you can pretty much find these wherever. Okay. And let me go back a little further, because this one's a downtrend. I can see that right there. Maybe that might be one where we are on a downtrend. Yeah, I'll take that one. So once price starts coming up back here, okay, and this one is going to be of a lower fib level. I can already tell by looking at it, but I could take it from here and it'd be a higher fib level. I think I might, but even from the top up here and you take it down, that's the other one that I'm looking at. But I could start with this one, with this high move up here you're in your downtrend, you're coming up, you're retesting the area that just broke and wicking through it. So you can take your fib here. Once price starts retesting or retracing, you can see that it came back up to the 61.8 right here, which coincides with these levels off up in here. Okay. So you had this, it's a little past it, it was a little above it, but it came up, gave a little wick, and just went back down, hit your second extension or your first extension level. Okay. Then it bounced back up. Okay. This other move, you can see the overall, not the overall move, but the bigger move. If price starts coming up from here, you see you're in your downtrend, you broke your higher lows. Over here, you're coming out, now you're making lower highs and lower lows. Okay. You can take your fib from the top. I take mine from the tippy top and from your bottom. When price starts coming up through here, you can see once it takes out this previous lower high and price is coming up, draw your fib on there, see where you're at. Right here, you can see, and I'm gonna move this over to the left. I don't like it like that. Or to the right. So you can see that price wicked up to 61.8, created a really good M pattern coming through here, and then just started coming down. And that's based off of your overall move. When you had your trend reversal, you had your head and shoulders pattern up here on the hour, if you can see that. Okay, you got your head or your left shoulder right here, got your head, and you got your right shoulder. Even though we did come back up and wick through here, I like to count at the candle bodies. If the candle bodies close out higher than the head, then I won't consider it a head and shoulders pattern. But if we have wicks, then I'll count those as shoulders. That's just fine. That's a nice reversal pattern at that level up here. And then that started our downtrend. We had our pullback for more continued down, and we had our bigger pullback. Okay. So this is your first trade right here. This is your second trade. That's a great entry for a second position for a continued down movement, and then we just barely hit our first extension level. Okay, that's a mean take profit right there from here to here. Yeah, on the hour time frame, you gotta remember, the higher the time frame, the longer these moves are gonna play out, and the bigger your payout is gonna be. So that right there went for about 330 pips. Okay, you would have caught that, especially after this M pattern started forming up here. That's why I like to say, guys, know your patterns, know when to spot them. This is clearly an M pattern that formulated on the hour time frame. Okay, that's a clear M pattern. Up here, you had your head and shoulders. If you guys haven't watched our other videos on chart patterns and candlestick patterns, then we go over all this stuff in here. These chart patterns take place, and they're most effective in areas of support or resistance in trend lines. Okay, so we just had two examples of that within our Fibonacci training. We line our Fibonacci levels up. You can see that these patterns are taking place around them, and then we see the result of that when combining your Fibonacci, your support and resistance levels, and your price action. Okay, you had that, and then you had this right here, and I'll go ahead and draw that in. All right, and hopefully everybody can see how these areas are support and resistance. Okay, you also had some up in here, and what I would like to, I guess, emphasize that you gotta remember, like I said before, your retracement and your continuation a lot of times isn't going to happen in that, like the first example that I showed you guys, where you have a straight move up and then a straight move down. A lot of times you're going to have price fluctuate. okay? And that's what gave us this M pattern. We could have looked at this and been like, oh, this is a great reversal pattern right here. This is a bearish engulfing, and we have a wick through here, a pin bar. So we could have been like, okay, well, I'm going to take this down, okay? Then you come back and look at it, oh man, price is back at my original position. If you take a good position, especially on the hour, and you come back, or say you're already up, say you're up like 50 pips, your target is, well, not 50 pips, say you're up like 10 pips, and your target is like 50, or you're targeting this extension level down here because you've already drawn in your fib. If you come back and look and your entry point is approaching, or you're slightly in the negative, you can be like, oh, let me look at my chart because we might be having an M pattern, because when I left, I was up about 10 or 15 pips. And if you have your fib level drawn out the right way, you know where all your support and resistance lines are, then you I bet you it's forming an M. Let me go look at it, okay? Especially if you know your patterns. If you left like the screen when price was down here, okay, and you took your entry all the way up here, you left, and then you're back at your entry point, that's a hunch that it's an M. You look at it, oh snap, it's an M. You know what? I'm gonna go ahead and take a second position. If I get some more bearish movement out of this point, if this let's just say as this candle's forming, that it comes down, it's coming past, you already have a dark cloud forming, and then you have a railroad when it's even with this bullish candle. You can risk it and be like, man, I'm gonna put on a second position, put my stop up here. Yeah, both your stops past the previous point of structure. So your stop loss would be up there, and you would end up having something like this, okay? Especially if your target is all the way down here where our extension levels are, okay? You can end up having something like that, especially off a smooth trend reversal, because we clearly came up, came back down. We got all the way back down here, okay? That should give you a good indication that if price starts coming up, you go ahead and throw your fib on. Maybe it'll hit the 61.8, it'll hit the 50, 78, whatever. Whichever level it hits on, then that'll give you a good indication that it's going to keep coming down, because we had a smooth trend reversal up here. We were in an uptrend, now we're in a downtrend. We came all the way down here, okay? As we start going up, boom, hit your fib, bring it down, put your second position on there. Once you start seeing that M pattern form, okay, because this was your original position, and you can bring that down to a little bit above the previous high, which was this lower high, okay? You want it past this zone, past the 61.8, okay? You bring it down, you got two positions running. After this second point came up and pretty much hit your entry point again, hit your second position in there, you got about, what's that? Excuse me. All right, 1 to 5 right there, and you're good. Okay, let that thing run, and you can see it came all the way down, hit your first extension level, and that's on the hour. All right, so I showed you the hour, showed you the 15. Your retracements on your fibs, they happen on every time frame. Okay, you have to go in, you have to find out which levels work best for you, even though they have reactions, or the market has reactions off of all those levels. That's what you have to realize when price is coming off of that retracement, because it didn't have a smooth ride down, especially after this second one, after this second the second leg of the M started coming down. We were hovering around this zone, okay, hovering around this zone, and we started hovering around the 23 in this zone before we finally broke down, okay? So as far as Fibonacci levels, hope you guys learned something. Hope you guys at least know the basics of the Fibonacci retracement tool found in your in your tools bar in your trading view. It's also on your MT4. It looks the same. It just has an F with a lot of lines, like 5 lines next to it. It's used in the same way. You do have a lot of other trend-based fibs. You got fib circle, fib spiral, fib speed resistant arcs, all of these different types of Fibonacci tools, which just goes to show that there are several avenues and several types of ways you can apply Fibonacci to the charts. Most popular is the fib retracement. Okay, that's the only one that I'm concerned about. That's the only one I know of. Knowing of all of these other fib-based tools within TradingView, I'm sure they work for some people. I have no interest in them because all I need is a fib and I'm good. That's all I need to know. I need to know all this other stuff. If you do, if that's something that you want to learn, then hey, more power to you. Me myself, I'm going to stick with the fib retracement because that's what I know best out of all those tools. Okay, so you guys haven't had a chance to watch our previous videos, S&M Trading, me and Marcus Thomas, that's Sean Benet and Marcus Thomas. You guys can find us on YouTube. If you haven't, or if you can't find us on YouTube, and if you haven't been able to see those videos, we can go ahead and send it to you guys via Telegram and our Discord chat. If you don't have a link for those, or if you don't have an invite, just let me know after this is over, and I'll gladly send you an invite for that. Also dropped a link to the YouTube video as well. And this will be recorded, so this will be our 4th recording on there. And as always, guys, like I said, if you have any questions, any concerns, anything that you guys want to ask, either me or Marcus, then feel free, very approachable, all that stuff. So you guys have a blessed night. It's S&M Trading, going over Fibonacci, and you guys on the next video. You guys have a wonderful day.